Okay, welcome to my first video on this YouTube. I'm going to be talking about the Forex fundamentals, how the market works, what Forex is, etc. So, what is Forex and how does it work? Forex market is simply betting on one exchange to be worth less than the other. For example, if I was to say this buy order, euro against the GBP, you'd be buying the euro against the pound. It would be the other way if you were selling the euro against the pound. The Forex market has a daily volume of $6.6 trillion, which shows how massive the market is. Due to this amount of volume, retail traders do not have a big impact. Instead, it's the big banks who control the markets. That's why you hear the phrase, trade like the banks. Okay, so I'm going to tell you guys basically all the commands which people say. Say if you were in a Telegram channel or a trading channel they will use these commands. So a stop loss, or they call it a SL, which stands for stop loss, is the price you will input for when the trade will become invalid and will close automatically at a loss. For example, if they said buy gold at 15 USD, even though it will never be at that price, and they said stop loss at 14. If gold was to reach the price of £14 or $14, you'd be stopped at the trade and you'd be at a loss. Or there's a take profit, or they call it a TP, is when the price of the market reaches the desired price, it will close the trade in a profit this time rather than a loss. Partials. So if you was trading at a bigger lot size, like a 0.02, 0.2, the ones, that's when you normally close half your positions and you will take profit on them. And then normally at the same time, like the next command, which I'm about to tell you, the BE or the break even. So you're setting your stop loss at the break even, so you're not risking any more capital. So that means you could just let the trade flow however you want it to go until you reach your desired take profit. Okay, so what moves the Forex market? The main fundamental which moves the Forex market is interest rates. For example, recently we saw the Fed. They said that they will stop hiking interest rates, which means they're going to stop putting the interest rates up. For example, they put the rates up by 25, I think it was base points last time. And then in the Fed speech, they said, we're going to stop rising interest rates. Because of this, their inflation was still high and they were going to stop doing interest rates. So gold became more valuable because the dollar was looking more weak, which is why the gold reached all-time highs. So another fundamental, as I said, is inflation. So a bank's main target, like the Bank of England, the Fed, is that they can reduce inflation. So in England right now, which is where I live, you can see there's a really big cost of living crisis which is going on, which is due to the inflation of food, which shows we have a weak economy. But recently, the Central Bank of England is saying that they will increase interest rates, so it's making the pound more desirable. There's also other data such as employment rates, manufacturing PMIs, which normally goes towards the oil industry. GDP and sales can also affect the price of currencies, but I'm not going to cover this in this video, so there's going to be more videos. I'm going to make a whole playlist on the fundamentals for you guys just for free. So how we can take advantage of the markets. As retail traders, we can only try our hardest to predict how the banks are going to change the price. There are many methods which I'm going to teach on this channel, so we see smart money concepts, trading fundamentals like these, like interest rates, fair value gaps, order blocks, and you need to look at it when you're doing your charts. You need to look at it from a higher time, so it's like a daily chart, and then you just work your way down the charts, and that will just give you the best possible trade that you can find. And so the banks, when they are trading, they are mainly looking to target retail stop losses. So when a stop loss is hit, it stops another competitor which is going against them. So if a stop loss is hit, they're not in a buy anymore, so the price will go down even more. Or say if they were in a sell and their stop loss was towards a buy and the market drive really high up, everyone's stop loss is being taken out. So it's just going to keep on going further and further. But obviously everything that goes up normally comes down. I say normally because sometimes it doesn't. So what to avoid when you're trading? So as a beginner, you're mainly told to use indicators, but if I'm being honest, they are totally useless. I only use one, as I said here, I only use one indicator which tells me where the price is going. So I use a relative strength index, which will just tell me what way the price is going, if it's in a bullish trend, if it's in a bearish trend. And also a bullish trend means that the price is going up. A bearish trend means it's going down. So if you are also looking to do some copy trading, you may see people online saying hundreds of trades a week. That's just, it's not reasonable. It's not going to happen. If you're joining someone with hundreds of trades a week, you're going to lose in the long run. You just got to find a high value setup which you want to take, and bang, there's your money. Because at the end of the day, Forex is all about compounding over the long run. If you search up compound interest on almost as little as £10 with 3%, even 2% a day, you're making, let me think. So you're making 20p a day, but it keeps on compounding. That's the value of Forex. It's all about compound interest. And the main fundamental, which even people I know who've been trading for multiple of years, trading psychology, always comes down to this. It's the hardest fundamental. You just need to find your setup and use, this is the phrase that I use, set and forget. You've got your stop loss, you've got your take profit. There's nothing that you can do to change it. You're trading with the banks. As long as you've got high value setups, that is all you can do in the Forex market. Look at the trading volume. It's $6.6 trillion. As a retail trader, we just have to try our hardest to trade like the banks. If you're closing your trades because you're scared about getting losses, maybe the Forex market isn't for you. Okay, so that's it for now. I'm going to be posting some more videos on smart money concepts, some more fundamentals like the employment rates, manufacturing, GDP. Thank you for watching, guys. See you later.